Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about US oil. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will move to the order flow by looking at the commitment of traders, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we could be looking for the next potential move here for this commodity. Now, starting here from the monthly time frame, what we can see is that at the moment the market is approaching a quite strong resistance level. In fact, this is previous monthly support preceding this green candle to the upside, which is now turned resistance. What we could expect here is a potential retest of this previous support and resistance before then getting a potential rejection to the downside. Dropping down on the weekly, we can see how from a weekly perspective we did have the creation of this M pattern. From here, we had the creation of the M pattern. After the creation of the M pattern, as I said many times on this channel, what you usually expect is for the market to create a potential move higher for the completion of the M pattern at the neckline, which is the previous support, turn resistance, also the completion zone of the pattern itself. And we can see, in fact, how that is exactly what the market did. We had the move to the upside, which is currently completing the M pattern at the neckline. Now, if we look closely, we can also see how the neckline itself, in this case, is previous weekly support, which is now turned resistance. Now, as we are testing previous support and resistance, we could expect some bearish price action to be developed away from this zone. We can also notice how, since we have an impulse, if we want to measure the correction, we have to take our Fibonacci from the high to the low of the impulse. And if we do that, we can see how we have a perfect 0.618 Fibonacci retracement lining up perfectly with the previous support and resistance, creating a confluence of resistance here, which we could expect this market to potentially reject to the downside. Going down on the daily, what do we have? Now here on the daily, this is where things really get interesting, because what we can notice is that in the creation of this move to the upside, the market is also currently creating a W formation, which is essentially the opposite of an M formation. And also for the case of a W, you would expect a potential completion at the neckline, which is the previous resistance turn support. So also here on the daily, what we could expect is a reversal from this zone to see some bearish price action rejecting the weekly resistance, and also in this case, completing the daily W formation at the neckline. And if we want to identify our completion zone, is exactly this one here, which is this previous daily resistance turn support. Now, if we go and see what we have when it comes to the commitment of traders, especially we look at the CAD, which correlates quite nicely with oil, what we can see is that with the last reports, in the short term, we're seeing a decrease of the net positions from 29K to from a minus 29K to minus 31K. However, in the long term, what we're seeing is an overall increase of the net positioning going from minus 37K to minus 31K. So there is definitely the possibility to see on US oil some short-term rejection to the downside for the completion of this daily W formation at the neckline is definitely at least a possibility, which would also in that case reject the weekly resistance that we have previously identified and the weekly 0.618 Fibonacci retracement as we have previously identified. So how we could be approaching this potential move to the downside and completion of the W formation at the neckline. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames. So for our and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to bearish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the downside for the completion of this W formation at the neckline. Now, if you don't know what I'm speaking about when I say valid entries, this kind of things, you want to learn more, I really suggest that you go and check out the mentorship program, which you can find at transparentfxtrading.com. In fact, now completely for free, you have the possibility to gain access to all my courses with all the rules of the strategies. You also have the possibility to integrate with one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used precisely in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down, you will see that directly from here, by following these 3 easy steps, you have the possibility to get free access to the mentorship program. So I really suggest that at least you go and check it out at transparentfxtrading.com, and I will see you in it. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.